only one thing standing in your way: getting a loan. Rest assured, United Mortgage Corporation of America is here to help make your dream a reality. Get answers, get results, get the service you deserve. What kind of loan do you have? Call now at 888-LIFE-980. That's 888-5433-980. Or go to the web at yourrealestatelife.com and take action today.
Welcome to Your Real Estate Life. It's your day in real estate radio. I'm Michael Harris, mortgage loan originator 233410 of United Mortgage Corporation of America, NMLS 3189. Visit our website, our radio site, yourrealestatelife.com, or you can start at our company site, unitedforloans.com. That's unitedforloans.com. Yourrealestatelife.com for the radio, and for our company, unitedforloans.com. We are for loans. We're not just for the interest that you're paying. So we want to make sure that is clear. Now, this is a national broadcast. If you're watching us on YouTube at Your Real Estate Life, and we are programmed and running here in Southern California. We are approved to lend forward and reverse. We can do that in 5 states: California, Colorado, Montana, Texas, and the state of Washington. Now, if you're in 46 other states, and we don't want to list them all, but we do DSCR loans, debt service coverage ratio loans. So those are for investors. And we help families on their personal finance, get out of debt, create more wealth. We help through a program where we have a webinar on Tuesday evenings at 5 p.m. Pacific Standard Time. Now change that to your geographic location, or you can actually gain information by sending an email, interest@aheadformoney.com. When you send that email, I will get it, not AI, I will get it. I'm going to send you out some information, some personalized information, access to our webinar. But if you can't go to the webinar, you're going to have my calendar. We'll schedule a time to talk, whether it's via the phone initially or it's on camera. But we're going to look what we can do to help you with your monthly discretionary to eliminate debt to create wealth. So that's really a summary of what we're doing here on Your Real Estate Life. Now, you can start with us at any time, 888-543-3980. That's 888-543-3980. Now, we're closing out 2025. We're closing the books. You know, it's where did it go? But it went. It really, truly went. You know, this past week, we had a holiday short week, but it wasn't short on gifts, including a surprising strong third quarter GDP. I mean, let's talk about it. I mean, third quarter GDP, it showed the economy growing at 4.3% annualized pace. I mean, that was well above expectations. So it was the highest growth in 2 years. It was important to understand the report was impacted by the federal government shutdown. So, of course, October, November, some of the delays that were there and calculations of GDP and what was happening. But because of that, this estimate relies on a mix of some standard data and assumptions, and making it less precise than usual. In short, the headline number is solid, but it comes with some asterisks involved. So we watch that. We're going to see how that fares as we head into January and earlier into 2026. So we're going to see how that fares with us as well. So we're going to see what we can do and where things are heading as we look into next year. But we're looking at the businesses. We're looking at the consumer was strong, but our business is strong. Our business is spending. What is it that they're doing? So we're seeing what is going on with that right now. So on the flip side, again, as I said, business items have declined. And why does this matter? The key takeaways: the economy is still growing. The type of growth really matters. Spending and services are essential, holding up the businesses and what's going on around us. So sometimes it's a false narrative. It really, truly is. And housing, we look at the affordability. We look at what the items there about keeping inflation in check. We're looking at insurance, that's involved as well. But the bottom line is the economy grew, but not the way that should scare the Fed into staying overly restrictive, and that's constructive signal for mortgage rates as well as we move forward. Now, A lot of words, a lot of info, a lot of data, a lot of stuff. But bottom line is we're watching what the Fed's going to do, and the bond market is pricing that in already. We're seeing what's happening. We're less than 20% that January we're going to get a Fed rate cut. So now we're looking at March. Then we're looking at April. So we're watching it carefully. We have clients that are moving forward right now because waiting is not the answer. It's preparation so you're ready to make your decision. I'm talking to you. Are you looking to purchase? The time now is to get pre-approved. Not pre-qualified, but pre-approved. You need to get started. We want to evaluate. We want to invite you to our Tuesday night webinar, 5 p.m. Pacific Standard Time. Yes, Tuesday night. I will send you out an email. Send that email to interest@aheadformoney.com. You can send that email. Some of you are watching now on YouTube at Your Real Estate Life. You could send a response there as well. So I thank you for listening to the program. But that email, interest@aheadformoney.com. When you send that email, I'm going to send you out an invite to Tuesday evening, 5 p.m. Pacific Standard Time. That's going to get you on the calendar, on that invite, on that live presentation. If you want to have a separate presentation, I can do so. You'll get on my calendar. If you want to have a discussion, we can do that. 888-543-3980. That's 888-543-3980. Many individuals are looking at the 10-year Treasury. The 10-year Treasury that finished in the 414 range, 413 and change. We're looking at that very carefully, 413.6. And people look at that as a real big takeaway. If rates go down, that can get lower, but it's not also directly tied to that on a number of occasions. We're looking at the big bets that are going on. And over the past week, we had a large institutional traders placing unusual big bets on the 10-year Treasury, specifically using March options contracts. One trade alone involved roughly $80 million in premium. With open interest jumping up 300% in a single week. That kind of activity doesn't happen often and signals new money is coming into the market. Now, not just traders rolling old positions forward. This is, in simple terms, sophisticated investors. They're positioning ahead of a potential shift in interest rate expectation. This could be a positive as we turn the calendar. Now, what this activity also means is, I feel we're going to get at least one move, but again, it's not the move that makes the difference. It's the pre-work prior to the move. So rates are usually better prior to a Fed move. So we're watching these movements. We're watching the 10-year Treasury. We're watching other large trades of 28 million in items targeting a 405 yield. So as I said, we're at 413.6 and we're targeting 405. So there's hedging lower. Those big bets are causing and allowing mortgage rates still to stay in the higher fives, lower sixes based on equity that you have. I'll repeat, United Mortgage Corporation of America, we are approved to lend in 5 states, California, Colorado, Montana, Texas, and the state of Washington. Now, if you're in a different state, I can help and give you advice. We are not closing in those states unless it's an investment property, DSCR loan, debt service coverage ratio loan. We can do commercial. We are doing construction. We're going forward and reverse mortgages. We look to help you and guide you through the process. In our next segment, we'll go over the calendar as we conclude this year. And you're listening to Your Real Estate Life. I'm Mike Harris. We'll have more after the break.
Your equity position has started to improve? Call about the removal of your private mortgage insurance or mortgage insurance premium and save money today. Call 888-543-3980.
What if I told you everything you understood to be true about money is not? If there was a program to eliminate most of your interest in your life and pay off all your debts, personal or business, even mortgages, in as little as 1/3 to 1/2 the normal time without refinancing and without changing your lifestyle, would you want to learn more? Call 888-543-3980 and request your information today, or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
Welcome back to Your Real Estate Life. It's your day in real estate radio, your trusted guide in real estate and mortgage planning. I'm Michael Harris, mortgage loan originator 233410 with United Mortgage Corporation of America, NMLS 3189. Give us a call, 888-543-3980. That's 888-543-3980. Visit us at yourrealestatelife.com, or hey, join us on our YouTube channel at Your Real Estate Life. I'd like to thank our audience joining us today on Fox Sports Ventura, 1590 AM, 97.9 FM, KBTA, streaming us at kbta.com. Our Sunday audience on K-Earth 101, streaming us at kearth101.com. Now that webinar, got a few phone calls in regards to it. Join us on Tuesday at 5 p.m. Pacific Standard Time, 1 hour webinar, educational, informational, about the Money Max program. Email me at interest@aheadformoney.com. Go to yourrealestatelife.com, register at the bottom of the page so you can join our Tuesday evening 5 p.m. webinar. I want to talk to you about various points of looking at interest rate versus interest volume. But the first thing I want to go over is, as we look at the end of the year, it's looking not what the headlines say and not what social media is promised. It's kind of working through what you are looking at and the decisions that you are looking to make and how it affects you. Now, the 2025 challenge buyers, tested sellers, forced homeowners to rethink equity, and reminded investors that cash flow still matters. Today we're breaking down the lessons that matter the most. This isn't about fear. It's about preparation. It starts right now. You need to get started right now. We're going to be going over that again next week, as we'll be in 2026. But the preparation starts now. If, depending on your income, you got self-employed, commission, the gig economy, buyers learned they weren't unqualified, just undocumented under the old rules. So we had to figure out how to read and utilize that income. We have bank statement loans. We have alternative documentation, flexible underwriting. That changed the outcomes. So we look at those items. We look at the affordability. It's about structure, not just price or rate. Buyers learn that waiting for the perfect rate often costs more than actually what they're looking to save. And people were spending more money accordingly. It's not waiting that's saving money. It's costing you more. First-time home buyers. We look at a strategy. It's not waiting, creative financing, temporary buy down, seller credits, down payment assistance. The education matters. Getting the alternative documentation, it's critical. And 38 and a half years I've been in lending, helping individuals succeed and move forward. I spend your money the way I spend mine, sparingly. I have value for my money, and so should you. If you're renting, you are making a mortgage payment. It's just not your own. Your landlord loves you. You don't need that kind of love in your life. The pre-approval has replaced the pre-qualification. It's not, oh, I'm going to get pre-qualified. No, you need to get pre-approved. It's competitive pockets, buyers who are fully underwritten, won their loan, won the opportunity, while others will miss it. Strong lender relationships, realistic budget planning made a difference. It made a difference in 2025, and it will continue to make a difference next year. I want you to succeed. I don't want you frustrated. I don't want you stressed. The first-time home buyer realized education really, truly mattered. But I don't want it to be woulda, coulda, shoulda, and being an afterthought. It's a today thought. And you're here today listening to our program. You found us, and you found us for a reason. You found us because you're either looking to purchase, refinance, add to your wealth, or eliminate debt. We can help with any of those topics. 888-543-3980. That's 888-543-3980. Whether you're self-employed, salaried, in some cases, don't even have a job, but you have assets. There's asset depletion loans. There's asset allocation loans. There's various ways we can look through bank statements and other opportunities to get you financed. If you have a loan right now, let's evaluate. Let's evaluate what you have and see if it's costing you money, or it's the right loan for your unique situation. We're looking at people gaining equity lines of credit, using simple interest to pay amortized interest. These items are getting done. We have seller lessons that were learned as well. Pricing correctly matters. Listening to professionals in your market is very, very important. We had overpricing. It punished sellers, punished people. We had people that were taking their homes off the market. We talked about, oh gosh, the pricing, we're having lowering of price because there were false expectations on appreciation going much larger, where perhaps maybe it's 1%, 2%, or up or down, but someone wanting to gain 10% was unrealistic. So we saw price reductions. You need to look at pricing correctly, making sure your monies, your numbers work based on market expectation. We look at sellers who are starting to do better or more with concessions, credits towards closing costs, rate buy downs. We were looking at those. A lot of education as to the tax advantages, talking to your representation, your CPA, tax preparer, enrolled agent, understanding what benefits there were for contributing towards closing costs. I mean, you've got to be able to be flexible and understand what is needing to be done. It's not just, oh, put it on the market. Oh, there you go. There's things that need to be done and information. You have a job, you do it well. I can't pretend to do your job. We want to make sure we're here to help guide you through the lending process. Now, I'm licensed. I have a California broker's license, but I don't list, I don't sell. I lend. So we prefer that. If you don't have a professional already on your team, we look to refer. Now, you want to make sure you have the right professional offensive line protecting you against the defense. We talk about that regularly. If you let someone on the defensive line or defensive side come in, you're a scrambling quarterback. Not an ideal situation. We want to make sure you're prepared, and we want to make sure preparation, as it does, it beats speed, because speed without preparation is not the outcome we want. We want to make sure your equity planning, your rate, your right program, we want to stay and keep that path, whether you're going forward or in reverse. Whether you're to keep doing a refinance for a reason, cash out, home improvement, looking at debt situations, we want to make sure you are covered. We covered DSCR loans a little bit. We always have rate volatility, whether movement is happening daily, a few times a day, depending on economic news. We watch that very carefully. But real estate is local, it's personal and strategic. Education beats speculation. Planning beats procrastination. And the best outcomes are from understanding your options and not reacting from fear. So we want to make sure you are protected all throughout the process. We want to make sure this is getting done for you. Rate volatility has become more normal. The perfect rate rarely shows up. It's the best situation based on the timing and what you're looking and the opportunities that you have. Smart borrowers will focus on that timing and keeping as much money on the table as possible. Now, I look at the market on a long view. I look at it on a midterm and short view because we have clients that fit each and every category. With that said, we have a weekly calendar. As we go into the end of the year on Monday, we have pending home sales index for November. That's going to be released at 7 a.m. our time here in California. And that signals buyers' contract activity for November. On Tuesday, we have the S&P CoreLogic Case-Shiller Home Price Index for October. That's going to be released early in the morning, typically about 6 a.m. We have the FHFA House Price Index. We're going to be looking at that. Now, that could be in and out depending upon how things are at the end of the year. But we also have Case-Shiller. That's going to be coming out as well. So we'll keep an eye on that. So again, they're going to be kind of mixed as we head into year end. We have I believe on the last day of the year here, 31st, we have the FOMC meeting minutes from the previous jobless claims and Chicago PMI. On January 1st, no major economic news. Of course, it's New Year's Day. On January 2nd, construction spending, ISM manufacturing, and S&P Global Composite PMI. I will remind you that even on quiet weeks or low or thin volume, there's a lot of volatility. And a lot of my clients have saved the most amount of money sometimes during these times, depending upon when they're looking to close. So my eyes are wide open and we're looking to save you money. So before we head to the break, I want to remind you that you can call us at any time at 888-543-3980. That's 888-543-3980. Now, you don't have to be live on the air. That's a rare occasion this day and age. Used to be everyone was live on the air. Now no one wants to be on the air. Everyone just wants to hide or email or text or send out other methods or leave a message so they can be called in another time. So it's important. When you leave a message, let me know the best time to reach you. Let me know the best direction. Is it text? Is it email? What's the best item? What is it that you're looking for? Are you looking to be a part of our webinar on Tuesday evening at 5 p.m. Pacific Standard Time? Do you want to get information? You can email us at interest@aheadformoney.com. You can do that or call 888-543-3980. You can go to yourrealestatelife.com and register there on the bottom of the page as well. So we can get all that out to you, some information, some background, so you can understand the concepts of looking at your monthly, your quarterly, your semi-annual, your annual items for budgeting, understanding the money you have left over and the money that you have so you can eliminate debt in your interest footprint. But primarily, I want to make sure your mortgage and your current loan is set up properly. I want to give it its blessing if it is, but also show and look at what the equity position is you have to see if we can do better for you. It's looking at what your liquidity is to look at perhaps home equity lines of credit in different methods so you can keep more money on your side. It's looking at a reverse mortgage, 55, 60, 62 years of age or older. If you're looking at a home equity line of credit, you may look at a reverse mortgage if that fits what you're looking to do. On a reverse mortgage, you have an optional mortgage payment, but you also have the capability of keeping a first and doing a reverse second. That reverse second allows that optional payment to eliminate debt. You can use that to the best way possible to help you move forward with your real estate life. So many options, so many ways to help, and I'm here to provide those for you. 888-543-3980. That's 888-543-3980. I mean, we're really not trying to sell you. We're trying to help educate, clarify, and help you to understand the structure and how to do this. You know, your decisions will come, and I'm hoping that you will look our way. We're here to provide a service, and we're never too busy to work or speak with you. So if you're watching us today, write down our number, 888-543-3980. Anything tied to real estate and real estate finance, tied to your personal finances, freeing up interest volume to allow yourself to eliminate debt, to create wealth. We are here to help guide you through the process. Now, that home equity line of credit I've spoken about, we have many individuals who have equity tied up in their home that don't have access. And when they need access, they can't get it because they may not qualify. So the best time to gain that access is when you don't need it. But mind you, a lot of you do need it. You just don't understand you need it. So that home equity line of credit, that's simple interest, can also relieve a lot of the amortized interest that you have on a 2, 3, 4% interest rate on your current first mortgage. We've had individuals eliminate their debt in 1/3 to 1/2 the time without changing their lifestyle. They're able to utilize a different way of making payments to eliminate their interest footprint. Let's explore where you are with your real estate life. 888-543-3980. That's 888-543-3980. The team is standing by for your phone call right now. If you do get a voicemail, please leave your information. I will be following up personally also after the program. Any missed phone calls, I'll be getting back to them right away. Any other phone calls, I will be also getting back and touching back, making sure you get all the information you desired, whether it's getting pre-approved on a purchase, refinance, cash out, rate and term. If you have an FHA loan or a VA loan, I'd like to talk to you about a possible streamline to lower your interest rate. But we want to make sure when we lower your interest rate that you're utilizing that money correctly to either eliminate debt or use that in another method that's creating additional wealth. 888-543-3980. That's 888-543-3980. I'll repeat, if there's a program that could eliminate most of the interest in your life, pay off all your debt, personal and or business, even your mortgage, in as little as 1/3 or 1/2 the time without refinancing. It's not a necessity. And you don't need a HELOC, a home equity line of credit, and you don't need an insurance method, checking and savings. If I can do all of that without changing your life, would it be worthwhile to find out more? Yes, it would. It's not going to cost you a dime. 888-543-3980 or email me at interest@aheadformoney.com. If the time conflicts at 5 p.m. on Tuesday, I understand. Send the email anyway. I'll provide my calendar to schedule your personal appointment. I'm also going to send you a few items to watch and look at. If you're a mortgage loan professional, insurance agent, financial planner, CPA, divorce attorney, because you got to split up assets, I like to talk to you separately. I like to invite you to, usually it's a Thursday night. This week's going to be a little bit hectic and weird, so possibly the week after, but a Thursday night webinar so you can see about how you may be able to assist or help your clients do better, free up additional discretionary to allow them to plan better. Not looking to take your clients. I'm looking for you to retain your clients and enhance your business. 888-543-3980. It really, truly starts with you. 888-543-3980. That's 888-543-3980. When I look at that calendar coming up this week, and of course we have the break in the middle there with the New Year's, we do have it really bookended. And the fact that we actually have a calendar again without a government shutdown really is starting to catch us up. But what we've seen now with some of the information and some of the consumer strength, but also business less spending, we've seen the odds of a Fed rate cut under 20%. And that's under 20% for our January meeting. When we lead into the March meeting, it starts going up to the 40s and then a little bit over the 50s as we head into April. Now, the Fed meets every 6 weeks. And the goal is, if we see this rising above 50, the bond market starts pricing in a change. Now, that change gets priced in. We see the mortgage rates get better. And people are waiting, oh gosh, when the Fed moves, I'll get started. No, you start, you get ready, you plan. So when the Fed is looking to move, you're ready to get the best result. Right now, we're roughly about a 12-month low, just shy of a 12-month low in our current mortgage pricing. So we are at that good spot. Now, I've had some loans in the recent weeks where the client goes, oh, we need to lock in. We need to lock in. And I said, no, we don't, because we don't know when we're closing. We don't know certain other items, perhaps. But also, the longer you lock, the more expensive a loan is. And all things were pointing in a better market and better timing. So with that said, we waited. We've seen gains, betterments in pricing, but also in costs. If we keep the same rate, we've seen up to $1,600 of savings. That's money that they have saved. So we're not looking to try to time the market, but we want good information and educational stuff that's there. And that's every single day. Give us a call, 888-543-3980. We'll be back right after this break.
Looking for a place to start? United for Loans is the place for you to start your refinance or purchase process today. Call 888-5433-980.
Yes, it's a little scary right now, but every crisis presents an opportunity. How many times have you looked back and said, why didn't I act? Do not try to navigate lending without a map. Tune in Sunday at 7 a.m. on KRF 101 with host and CEO Mike Harris of United Mortgage Corporation of America to discuss your real estate life. What should I do? Buy, refinance, sell, or hold? United Mortgage Corporation of America is open for business and ready to lend. Visit unitedforloans.com or call 888-543-3980.
Lending can be a bit confusing. Numbers can be tossed from one direction to another. How can you make it all stop? United Mortgage Corporation of America, UnitedForLoans.com can be your guide. Call directly at 888-5433-980 for what you need to know when financing a home of your dreams or commercial property. Call now at 888-5433-980 or visit at UnitedForLoans.com. That's 888-5433-980.
Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm your trusted guide in real estate and mortgage planning. I'm Michael Harris, mortgage loan origination license 233410, United Mortgage Corporation of America, NMLS 3189. Call now, 888-543-3980. That's 888-543-3980. Visit our show site, yourrealestatelife.com, or go to unitedforloans.com. That's unitedforloans.com. Or as some are watching on YouTube, you can watch our programs live there and also on back order. You can go to Your Real Estate Life. Thank you for joining us here on Fox Sports 1590 AM, 97.9 FM, KVTA, and streaming on kvta.com here in Southern California. Our Sunday audience in the morning, 7 a.m., K-Earth 101, and streaming at kearth101.com. Now let's talk strategy for investors and retirees. Let's look at the tools that people have as we finish 2025. Now, investors, they looked at cash flow. Cash flow mattered. A little bit more than appreciation did. We've seen a lot of stagnation to that. In some markets, a little bit down, and some markets sideways, and some just a little bit up. So we want to make sure that your monthly is not eating at those profits. So a lot of times in different markets, you hope for appreciation, and that's really where you're at. So a lot of times when we look at lending, we want to make sure rents are offsetting payments when we're doing what is called a DSCR, debt service coverage ratio loan. And sometimes that's tougher because sometimes you're upside down and we need income and qualification to offset that setup. So different markets, different states are different. We're licensed in 46 states, so we're able to close in 46 states for DSCR lending. And we love to help you with that analysis and understanding. Now, there is conservative underwriting to some of this based on market. But again, we don't want it to be all speculation. So we don't want to have a problem. So we want to make sure we have our facts. As I have people get pre-approved, we want to make sure we have our facts straight, and we rely on the other experts involved, from appraisers to various items to the rents and other things that are going on going forward. When we look at retirees, equity became a planning tool, not a last resort. We've had some step forward and look at reverse mortgages. As I talked a little bit earlier, if you're 55, 60, or 62, depending on your state, there's various programs that are available utilizing FHA, a HECM program, or there's private reverse mortgages as well that allow for jumbo, larger loans. And also they look at age. One of the components, or multiple components, we're going to look at the age, the date of birth of our borrowers. We're going to look at how much is owed on the property and what the value of the property is to find out what equity we have to utilize. So in doing that, it's very important. It's equity-based cash flow strategies, so we can gain some traction to understand whether you're looking at monthly, whether you want money up front or get a line of credit. All these items do matter. So we want to make sure we're setting it up properly for the investor, but also the retirees. We talked about first-time home buyers getting pre-approved versus pre-qualified. So it's gathering your documentation. It's understanding your income and your stream of income and how you're earning it. Now, at the end of the year, you're going to receive a W-2, but you have a last pay stub. This last pay stub is very important because it breaks down your overtime and your bonus and gives the last income for the year. So breaking down that overtime and bonus is important when we look to get you qualified. So I'd like to have you go back a year ago and this year and have those available. So this way we don't have to rely on technology, which is now $200, $300 to go spend to go get the verification on this material and information, as most companies have now outsourced the ability to verify. So I'm here to save you money, but if we can prepare for it, that's really what's best. I just don't want to ask for your credit card and go charge you for something that we needlessly have to pay. I spend my money the way I spend yours sparingly. I want value for my money, and so should you. You've got to make this work right. And I'm giving you the information best so you can keep more money on your side of the ledger, so we can actually close the cheapest way possible based on your unique situation. And we talk about it, but interest rate isn't necessarily the only shopping event. It's the way the loan's being paid, but also how much you paid to get the loan. Gave an example. We have a client who is closing, and we need to buy her rate down. We're buying her rate down to 5.375%. The reason why? We need to get her debt to income ratio low enough to qualify. So it's costing us an extra, in her case, it's costing us an extra $8,000 to buy down the rate. I don't like spending that money, but we need to get the loan qualified. So it made sense. But normally I take a look at how much money it's saving monthly, divided by the additional cost. How many months is it before you like me? How long are you staying in the property? We look at the market, we look at the trends. If interest rates are looking to go down, then perhaps we don't want to spend as much money because now we're buying what's going to eventually occur. But of course, you're paying down equity, building equity in some cases, and we evaluate your market and where you're going to make sure of those items and numbers. But again, waiting is costing people more money. And waiting for something that has already been priced in is even costing you more because you're following social media, you're following not news, but you're following past statistics. When you hear on Thursday that rates were down a tick, that was not this week, it was the week before. You're a week behind. So when someone says, oh, I heard rates went down. Well, yeah, they went down a week ago. And to this week, they're up. And then next week, the information comes out and they are up a little. So we want to make sure we're looking at actual news, current information, but not statistics that are already occurring. When the Fed moves rates, mortgage rates have already priced in. When the Fed moves the discount rate, it helps move consumer rates, the prime, and sometimes your savings accounts go down, right? CD rates go down, not up. But we want to look at what effects occur based on what decisions you're looking to make. And they need to be the right ones. You're making a false narrative, and many people call me, what's your rate? Well, what do you want to hear? What rate do you want to hear? I know nothing about your credit. I know nothing about what you owe. I know nothing about the value of your property. Are you looking to purchase? Are you looking to refinance? Are you self-employed? Are you salaried? Do you own other real estate? Do you write off? Do you show any income on your tax return? Do you have qualified deductions? Do I need to go with bank statements? Do I need to go with other alternatives? Are we looking at an investment property, a primary home, a second home? All of those questions technically come after what's your rate. We need the proper information to get the proper answer and result. And whether it's overtime or bonus or a second job that you just got, or you change jobs or you're not working, all these items matter. And it's doing the prep work. It's doing the call. It's getting the information to make sure you are pre-approved. Not a conversation, but verification and documentation. It's gathering the bank statements, making sure they look correct, making sure odd deposits or overdrafts or anything else that may have occurred. It's getting all that information right so you have that path going forward. We talked about it earlier. We have a webinar on Tuesday evening. That's going to be at 5 p.m. It's going to be 5 p.m. Pacific Standard Time. Send me an email, interest@aheadformoney.com. On that webinar, we are going to look at the MoneyMax account. That account is going to help you eliminate debt, eliminate your interest footprint, and do it in a fast and efficient manner. Same way you use your GPS in your car or on your phone. You get to your destination in the fastest way possible, taking into account any accidents or any deviations that need to, or perhaps you didn't know were there. And you wonder why you went this way versus that way, because there was an accident. So let's find out all the accidents and all the deviations and get you on the path of eliminating debt more efficiently. Having a perfect GPS, a perfect individual who knows more than me, you, and many others combined, that gives you perfect information. It's worth finding more about it. If, it's that quick and that easy. interest@aheadformoney.com. I'll look for your email. I'll send you back a reply and get you access. I'm Mike Harris. We'll have more after the break.
Get pre-approved for your home purchase. Your landlord loves you. You're making their mortgage payment. Own for less than you pay for rent. Call 888-5433-980.
What if I told you everything you understood to be true about money is not? If there was a program to eliminate most of your interest in your life and pay off all your debts, personal or business, even mortgages, in as little as 1/3 to 1/2 the normal time without refinancing and without changing your lifestyle, would you want to learn more? Call 888-543-3980 and request your information today, or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
Money, money, money. Must be funny in a rich man's world.
Welcome back to Your Real Estate Life. It's your day in real estate radio. Thank you for joining us. We have a wide audience. We have an audience here on KBTA 1590 out in Ventura. We have an audience on KEarth 101. We have our audience that's streaming us live on kbta.com and kearth101.com, and our YouTube audience also on at Your Real Estate Life. We also have our LinkedIn audience. Thank you so much for joining us. I see a lot of people visiting and coming in, coming out, and some comments that are coming through. So I really appreciate that. And again, I look forward to talking to each and every one of you directly. 888-543-3980. That's 888-543-3980. Been in lending now 38 and a half years. 38 and a half years in lending. Been on radio now 19 and a half years. And we're doing this YouTube item, and we've been doing it for a short time. So definitely go to our YouTube channel, Your Real Estate Life, like and subscribe. I appreciate that. Tell your friends about it. You can always catch any of our programs going to our website. Our audio is there, but you can reach me, 888-543-3980. Sign up for our webinar on Tuesday evening, interest@aheadformoney.com. Now, that webinar is not for lending, but it is for personal finance and eliminating and getting rid of your interest footprint. Now, I talk about that, and everyone's supposed to understand, but many of you don't. When you have a home loan, you have an amortized debt. That amortized debt, when you look at your mortgage statement, you pay interest. Now, where you pay your interest is really important. And on an amortized loan, a lot of it's early versus late. And the goal is to move further down your amortization scale so you can pay more money towards principal to eliminate that debt. Simple interest is interest only. So simple interest is level. Amortized interest is steep. You pay a lot of interest before your principal. Usually it's about 18 to 22 years before you're 50-50. Not a good thing, right? So when you look at your mortgage statement and you are at 3%, you may have started at 58% money going towards interest. I want to make that lower. We've been able to get that number down in the single digits, if not very low single digits, for many. Rather than a 30-year loan or owing 28 years, 26 years, we've seen people take it down to a third or half the time, even as little as 5 to 7 years, debt-free. Not just the mortgage, everything. Now, of course, you have your normal items. You have your insurance and property taxes. You do have your gas, power, electric, and water, and some other things that you have an elective. You don't have to have them, but you have them. So you have your fixed expenses. But if we get rid of all those variable items, so you are the bank, you control the interest that you pay, and you're eliminating majority of that by hopping over the wall. And now you're borrowing someone's money and paying it back after, let's say, 30 days. So you're now using other people's money. And if we can show you how to do that in an efficient manner to pay the least amount of interest possible and have a debt-free date, whether you own real estate or not, that is what we want to accomplish for you and show you how it's possible on Tuesday night at 5 p.m. 5 p.m. Pacific Standard Time. Change that for your own timeline. Send me an email, interest@aheadformoney.com. I'm going to reply. I'm going to send you out an invite. I'm going to send you out some items to watch. Very easy to watch. A couple of few links, and that will give you a little bit more background. You're going to have my Calendly in order to set up an appointment with me if you choose to, prior or after. And we can go over your particulars, because I want to know your why. I want to know what's going on with you, not everyone else, you. Are you looking to purchase a home? Are you looking to move forward, pay off debt, to accumulate wealth, buy more real estate? What is it that you're looking to accomplish? And under the same breath, you're a professional. Maybe you are in real estate, a realtor. Maybe you're a lender. Maybe you're a financial advisor. Maybe you're a CPA, maybe a divorce professional. I want to show you how you can help your clients do better, help you and your business succeed, and actually provide a service that may not have been provided previously. And your clients will thank you. So if you're watching this program today or listening to this program, and you're curious how to eliminate debt and how to create wealth, how to have not just a sexy number, but a number that actually works best for you when it comes to your loan, call now, 888-543-3980. That's 888-543-3980. Now, what 2025 has shown us and taught us, real estate success doesn't come from predicting markets. We've had a lot of people fail. Chasing interest rates, same problem. We're waiting for the perfect conditions. The perfect condition is when you want to get it done and the numbers make sense. It comes from understanding structure, having options, and making informed decisions at the right time. I want to help you be a part of that. Buyers learn that affordability isn't just about price. It's about preparation, strategy, and using the right loan tools. There's all sorts of programs. There's programs that will forgive a second. There are programs that give you money up, grants. There's programs that will allow discounts based upon certain times and timing. During the end of this year, I'm actually giving discounts to close on rate and term refinancing. We've had people save thousands of dollars. Homeowners have learned, it's not something to fear. Equity, it says homeowners learn that equity is not something to fear or ignore. It's something to plan with. And that's what the Money Max account does. It's using that equity to plan, whether you're using home equity line of credit or you're planning to use it strategically. A loan is a loan until you decide that it's a tool. And the loan that's a tool could be working best for you and your finances. Investors are reminded the cash flow wins. Conservative underwriting matters, and flexibility creates opportunity. It's a lot of words. Your individual situation matters. Retirees discovered that their homes can support their lifestyle without forcing a sale or sacrificing control. People are staying in their homes longer. They have lower tax rates in most states as a result. Across every group, the lessons were the same. So what did 2025 really teach us? The big lessons. Let's go over them again. Education beats speculation. Planning beats procrastination. Flexibility beats rigidity. And real estate is personal, not one size fits all. The best outcome in 2025 didn't go to the people who moved the fastest or waited the longest. They went to the people who understood their options and acted intentionally. As we move to 2026, the question is, what will rates do? We talked about it. Does it matter? Maybe a little bit. I do feel that we see a quarter coming. It's just I don't see it this upcoming January. It might come in March, or it could come in April. We're going to watch the economic calendar as I do each and every week. But the real question, am I positioned correctly if they do change? Because when your financing matches your cash flow, your timeline, or your goals, you don't have time to react. You need to respond. I want to set you up to respond. And that's what this program's all about. It's not hype. It's not fear. It's real conversations, real planning, real strategies for real people. We come to you each and every single weekend with some fresh content, and some content that is repeatable. But many of you are joining us for the first time, and I'd like to welcome you to our audience. I've been doing this for 38 and a half years, 19 and a half years on radio, and I want you to make the best decision when it comes to your finances. 888-543-3980. The tailored takeaways I'll give you for first-time home buyers, you don't need the perfect conditions. You need the right plan. For investors, if the numbers work, the deal works, regardless of the headlines. You need to understand the market that you're looking to purchase in and have the right professionals giving you the right information so you can make the informed decision. When it comes to financing, we are here to help. For retirees, you can support your lifestyle without selling it. I'd like to show you how that's possible, whether it's utilizing the equity for qualification or it's using it for possible reverse mortgage options. The lessons of 2025 aren't warnings, they're tools. Those who understand how buying, selling, and financing work this year will enter 2026 with clarity, confidence, and options. If you want to understand how these lessons apply specifically to your real estate life, whether you're buying, selling, investing, or planning for retirement, that conversation always starts with education. If you want to understand how these strategies apply to your real estate life, call us right now, 888-543-3980. Join us at yourrealestatelife.com or unitedforloans.com. On Tuesday evening at 5 p.m. Pacific Standard Time, we'll have a 1-hour webinar. I want you to join us there because we're going to help with education, information, and share more about the Money Max account. Send me an email, interest@aheadformoney.com, or register at the bottom of the page at yourrealestatelife.com, or call us at 888-543-3980. We'll continue our journey of reaching one family at a time. We had a tremendous 2025. We had many people move forward on their purchase transactions, whether it was the first-time home buyer, move up, move down, adding to their portfolio. We had some individuals who have done reverse mortgages, whether it was on their whole loan or some who did a reverse second. We had individuals who were doing a reverse purchase. We've had some individuals who had no job, but they had assets. Those assets is being distributed over an adequate time and based on underwriting, we're able to qualify them for a home loan. We've had individuals put little to no money down. We've had individuals put 60% down. Of course, we've had some individuals pay cash for a property, and then they come back and do what is called delayed financing. And coming back, recreate the purchase, and we're ready to move forward. So where you are on or in the process of getting pre-approved, getting started on your journey, or looking to plan for a home addition, maybe a consolidation of sorts, or understanding what really that best path is, call us now at 888-543-3980. That's 888-543-3980. I talked about the calendar, and as I look at the middle of the week, of course, we have the holiday, of course, being New Year's. And we kind of have a bookended with some good information. And then the following week, we have all of the employment information coming out. So we're kind of preparing that with our current clients based on their closing dates. Now, we don't have anything closing that's tax consequence this year. In years past, we've had deals that we've had to get closed before the tax year ended. It was like a big deadline, and we've made those deadlines in the past. So right now, it's really about the pocketbook. It's about the savings of money. In some cases, if you're spending a lot to gain the result, it's a difference of taking the deduction this year, but on a refinance, of course, it's over the life of the loan. So it matters, but it doesn't matter as much. On a purchase transaction, that deduction could be this calendar year, and that becomes more important. But right now, majority of our deals that we have right now are closing in the month of January, so they're not pressured to the end of the year. Where you are and what you're looking to do, if we close your loan in January, your first payment's March 1st. Now, you didn't get a month off. You just owed interest on the previous loan. So if that was the case, you would refinance every single month because you'll never have a payment again. If you have a purchase and you're renting, you might have a month in between because you paid rent in advance and you paid a mortgage in arrears and you have the month in between. So that is actually decent planning when it comes to a purchase. Your professional, your realtor will share that with you, as well as us on the lending side. But it's important to have that professional team representing you. It's planning and understanding and knowing your options. We don't want you surprised. I can't do your job as well as you do yours. I may understand your job, but just because the surgeon told me the surgery doesn't mean I'm going to make the cut. I would need you to give us a call and talk to us about what your plans are going forward. I'm never too busy to work or speak with you, and I'd love to help you today. 888-543-3980. Go to yourrealestatelife.com or unitedforloans.com. Our listening audience today is on Fox Sports Ventura, 1590 AM, 94.7 FM, KVTA, and streaming at kvta.com. Our K-Earth 101 audience is at kearth101.com and streaming us at kearth101.com as well. And then we have our YouTube audience at Your Real Estate Life. We have people listening to our past programs by going to our websites, and we have our live LinkedIn audience as well. So we're all over the place, and we're here to help you and guide you through the process. It's all about saving you money. And, you know, there's a lot of people that you can go to when it comes to lending, and there's a lot of good lenders out there. There really, truly are. But there's a lot of them that, well, I'm getting there, and I don't want them getting there with you and spending your money and not saving your money. And my goal is to help you through that process, but also the process thereafter, making sure your money is spent wisely and then eliminating your interest footprint and moving forward correctly. I've taken my journey and helped myself and my family. My kids are out of college, and my daughter's getting her master's, and she'll be finishing this year. And both of them have no student loan debt. They're in a position to start their lives squarely. Done my job. I've also done the right financial planning, but I've also set up the debt and structure in a way that I'm paying the least amount of interest possible. And that's what I want to share with you. Not that I know everything, but that's why I'm part, and I work through also the Money Max program. I took my 26.4 years down to 12.3 on my own, and through the program down to 7.9 years. That additional 4 years, saving me over $100,000. Left to make a dent and save you money as well. If it can, great. If it's not right for you. Join us Tuesday evening, 5 p.m. Send me an email, interest@aheadformoney.com. Have a safe 2025, and I'll see you on the other side in 2026. Until next week, what kind of loan do you have?
Corporation of America, unitedforloans.com will continue to take your calls after the program. Call now to start your home loan process at 888-5433-980.
Thank you so much for joining us here in 2025. It's been exciting to be here. So many people have sent us thank yous, and I appreciate all of that. And I want to be here for you again in 2026. Join us next weekend for an exciting program, an exciting calendar. We'll have guests. We'll have a lot of information going in, but it's all about saving you money. Till next week, what kind of loan do you have?